If we look at the last year or the last 18 months, it's been pretty much a record year for us. And I think the market in general, exits have been obviously very good. If we look at the last 18 months, we had 7 exits and a recap last year, and we've had 2 exits already this year and 2 more in the pipeline. So it's been, as I say, a record span of 18 months for exit activity. Returning more capital in that period than we have, ever before. So that's all very positive. The market has been at record activity. I think it's actually sort of still a little bit flat, or maybe even down from last year. But we, as a firm, did 4 investments last year, and we've already done 2 this year, and sort of we're on track to do 4 more, 4 investments this year. So it's a good span for us in doing new investments as well, and that may be a little bit more. I think different experiences in different parts of the market amongst different players right now. The review of pension allocations and the whole GPIF thing will potentially allocate more capital to equities generally, and then within that potentially alternative assets and private equity, which will probably take longer than just more allocation into public equities, which we've already seen some movement there. And as you say, when they move into and begin allocating to alternative assets and private equity, I think they're already demonstrated they're going to be looking at sort of global standard advisors and input to decide how to begin doing that, and that would be creating a global portfolio based on the recommendations of the usual participants that are out there, meaning that the Japan piece of that may not be a large part of the allocation. Having said that, Japan is their home market, and I think Japan would get some consideration for an allocation. The short or immediate term, and it's really hard to say how quickly they'll be able to gear up decision making and have things in place. I wouldn't anticipate things happening in a short 6 to 12 month time frame, but probably something a little bit more medium term than that. It is something that we think about almost all the time, because there's several imperatives that force us to think about that. More and more companies in Japan are looking to grow their businesses outside of Japan, and are looking to work with a sponsor or a partner who can more effectively help them in growing their business in geographies outside of Japan. So there's a competitive imperative for us to be able to continue to have an advantage sourcing and helping companies in Japan. We need to demonstrate that we can, either through partnerships or direct capabilities, somehow support them in their strategy outside of Japan, whether that's supply chain sourcing, market development. We have in our last fund 4 investments outside of Japan in the region, and a couple of in China where they were sourced and came to us because of our presence in Japan and because of the expectation for being able to support those companies with strategic relationships, technology sourcing in Japan, things like that. While we have in our current fund narrowed the scope back to Japan only, and are looking to do that in our Fund 5 as we go forward, there is a discussion about raising a separate pool of capital then that would take advantage of these opportunities where companies in other parts of the region are coming to us because they see potentially some strategic value add for them in having a Japanese partner.